Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M1M, as you know, is the first global virtual accelerator in the world for startups. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion of global GDP and 10 million jobs. And in support of that mission, we do these roundtables every week, week after week after week. This is the 362nd episode of the roundtable. We started way back in 2008 September, and we tinkered, we experimented, and then somehow it fell into rhythm, and we have developed this program 1 million by 1 million based on those initial experiments of the first few roundtables. So we've come a long way. The 1M1M program in its current format was launched in 2010. So that too has been now running for a long time. So we have a huge number of private roundtables for our premium members as well. So this format of online mentoring has become quite a standardized format in our ecosystem. Now, today's focus is on economic development, and in particular, our work with a partner, a very special partner that we have had a successful economic development partnership with. And I'm going to introduce you shortly to Ken Anderson. Now, if you're live tweeting the show, please use hashtag 1M1M. Our Twitter handle is @1M1M and @Stromana. You can follow either of those. We publish a tremendous amount of really interesting content. The 1M1M Roundtable channel on YouTube has recordings of every single session. We'll have this one as well, and lots of other video content. These are the call-in instructions, and we will have time for Q&A today. In fact, there will be, people who may want to weigh in with what you are doing in your respective regions, in your regional economic development efforts, vis-a-vis entrepreneurship. So we would love to, hear from you. So we'll put the slide back up when you're ready for that. But do make a note and do line up your questions, your comments, your perspectives. We're very eager to hear them. So let me introduce you to Ken Anderson, who's the Entrepreneurial and Small Business Support Director, Division of Small Business Support and Tourism at Delaware Department of State. Ken, welcome. It's great to have you here.
It's good to be here, Sharama. It's good to talk with you again.
Yes, indeed. So, Ken, why don't you introduce our audience to what you were thinking when you conceived working with 1M1M in the context of Delaware's economic development?
Well, having been in this job for going on 9 years and overseeing the development, evolution of our ecosystem, there clearly were some areas where we had gaps with serious entrepreneurs who had to maintain full-time jobs to hydrate their entrepreneurial dream, part-time jobs. They're working on their business concept after working hours on the weekend, and we really didn't have a robust, serious entrepreneurial venue for those individuals that was available to them when they were available. So I actually participated on these Thursday roundtables, listening in sometimes, actively engaged sometimes for over a year. And I was convinced that this program had the entrepreneurial content to kind of mentor savvy business development strategies that could help our marketplace. And as a result, began to talk about and pursuing this partnership within our state, and ultimately consummating it with you, Sharama.
So you bring up some interesting points. There is a myth in the entrepreneurship ecosystem that people should jump in with both feet into their ventures, otherwise they're not serious about it. And if you look at the statistics, there have been a lot of research done on this topic at this point, and if you look at statistics, you will see that people who actually, mitigate the risk of running out of cash in very creative ways, and one of those creative ways is by holding on to their day jobs and starting their companies on the side, working nights and weekends, and somehow or the other managing to keep the cash flow alive while they're validating their ideas, talking to customers, getting a product done, et cetera, those kinds of entrepreneurs tend to survive at a higher percentage and with a higher probability than people who jump in with both feet and then run out of cash very often. So if people are telling you, audience, if people are telling you that you need to quit your job immediately, otherwise we don't take you seriously as an entrepreneur, please ignore that point of view, because it is not accurate, it is not a fact, it is not true. Yeah. So what Ken is highlighting here is something very fundamental and very subtle that gets lost in this big noise of funding. The obsession about funding dominates the media attention. People are all the media is constantly reporting on funding news, and entrepreneurs are mistakenly led to believe that funding, if you want to be an entrepreneur, the first thing you need to do is raise funding, and that's also incorrect. Ken, what are you seeing in your ecosystem? I remember we had extensive conversations on this subject when you approached us in the beginning.
Well, we had a unique system, a situation here in Delaware that almost plays into exactly the concept and strategy that you're discussing. I mean, we didn't have robust number of angel investor or VC capital or even external financing that would facilitate the entrepreneurs that I was working with and the small businesses at the early stage. I wasn't a real strong proponent of debt financing, so we really needed to have a strategy where entrepreneurs and small businesses could begin to validate their business concepts at the early stage without having necessarily robust amounts of external financing to support that. And I was convinced through listening to your programs that there was a way for most industry sectors, bio and pharma sometimes is a little bit different, but for most industry sectors, there is a way to validate business concepts, validate target market, validate pricing without really a lot of financing to facilitate that. And that's really, our situation was such we didn't have a lot of that available, so this program fit perfectly for us.
So this is absolutely, core to our philosophy, is we believe that you can build businesses without external financing, and you need to choose businesses that are not deeply capital intensive. Like if you're going to need to do research on drug discovery, obviously that cannot be done on a bootstrap basis. That's a whole different ballgame. If you're going to try to build a chip that requires financing, but for the vast majority of internet businesses, software businesses, mobile businesses within the IT and IT-enabled services categories, which is what we focus on, you can, more often than not, you can build businesses without a lot of outside financing. And as a result, this program focuses on that philosophy. We push you hard to focus on customers and revenues as opposed to chasing financing. Now, of course, some of our entrepreneurs have raised huge amounts of financing, but that is after they have validated, after they've got their, paying customers and got their business models, pricing models, customer acquisition costs, all these, metrics figured out. And these days, investors typically do not like to invest unless you have those things figured out. The other thought that Ken is highlighting here, which is really important to keep in mind, is that today, because the internet is pervasive, mobile computing is pervasive, you can really do IT and IT-enabled services businesses from anywhere in the world, literally. And we've over the period of time that we've been doing this, which is coming up to 10 years, we have met entrepreneurs literally from every corner of the world, and we support entrepreneurs from every corner of the world to, build on their dreams. But it is true that there are, seed investment, pre-seed investment ecosystems and venture capital ecosystems in only a few, hub cities in the world. Of course, the whole Silicon Valley area is very vibrant, very, abundantly served. There are other places like Seattle, Boston area, to some extent Austin, a little bit in Southern California. These areas within the U.S. have developed, some amount of a network, VC network, investor network. The New York area has investor networks. Outside of the United States, there are some investor networks developing in London. There's a little bit in Berlin. There's a little bit in Paris. In India, there is Bangalore is good, Mumbai, Delhi, NCR. So there are the big cities. Some of the big cities, 3 or 4 big cities in India have good networks. So there are some investor ecosystems that have come together. But if you live outside of that investor ecosystem, you are more likely to have to develop your businesses without external financing, at least for sure, up to the point where you can show that you have high-velocity traction. If you have high-velocity traction, actually, no matter where you are, there's a good chance that you would be able to raise money, even from one of these other ecosystems where there are investors, because people are willing to invest in remote ventures if and only if you have traction. Typically in pre-seed investment, seed investment, people don't go out to remote geographies and invest. So that is almost an unheard of situation unless it's friends and family. So given this hand of cards, what Ken is describing is really, really important for you to keep in mind if you are planning, especially for those of you who are doing economic development policy and strategy from different parts of the world. This is something that is worth keeping in mind, is that you need to create an infrastructure and a framework such that people can work without being obsessed about raising funding right out of the gate. Ken, do you want to add to that?
Yeah, I'm a believer having operated in ecosystems where funding was readily available and others were not. At the end of the day, whether you have readily available funding or not, to get the best value out of that, you're still going to have to do all the validation strategies which are so core with 1Mby1M approach. So, even if we had a robust amount of funding available for early stage entrepreneurs, we would have a very, very robust protocol about who gets that money, and it would be based upon the validation strategies that are part of this curriculum.
All right. So why don't we talk to some of the entrepreneurs from the Delaware program, Delaware 1M1M program. I'm going to just set some expectations, and this is actually the people who will be pitching today all know this because they've been in the program and they're all very familiar with the program. But I'm giving you this context more for those of you who will be pitching in the future, who are listening to this and making a decision to pitch in a future session. This is a working session, okay? So we work with you and help you accelerate your journey by giving you, guidance based on our experience. We are completely on your side. There is absolutely no other agenda for us besides supporting you. So please feel completely safe in discussing whatever it is that you need to discuss, and let's see how we can add value to your process. Now, if you disagree with the feedback that I give you, that's okay. it's your venture. At the end of the day, the venture is yours. The strategy decision you're going to make are yours to make. We give you perspective, and that's about it. The one thing that is actually non-negotiable, and if you try to negotiate on this, you're going to generally not succeed, which is not all businesses can raise money, and raising money does not guarantee success. So not all businesses can raise money. Let me elaborate. Venture capital financing operates on, very large market opportunity, very large TAM, total available market, and very fast growth businesses, exponential growth, going from 0 to $100 million in revenue in 5 to 7 years. Very, very few companies fit that criteria. So typically, less than 1% entrepreneurs actually succeed in raising financing, and you're going to have to take that statistical fact into account and decide on your strategy accordingly. So if you have a company that is growing at a slower pace, and by the way, we constantly, bring case studies here of companies that are growing at a slower pace. Last week, we had a company who started in Australia, eventually ended up in the US, but operated at a 2 to 3 million run rate for, several years. So it took them 5, 6 years to get to that $2 to $3 million run rate, and then they plateaued there for a while before finding the next inflection point, and now they're above 10 million in revenue. As far as we are concerned, this is not a failure. It's okay if it takes you time to figure things out. It is not okay with VCs if it takes time for you to figure things out. VCs want to grow really fast, exit, and be done with it. They are working with funds that are, typically 7 to 10 year funds. So they need you to exit within the 5, 7 year period so that you can, make their funds look good. That is the venture capital model. And there is no negotiation on that. We have no control over this. You can be upset at me for telling you all these realities, but it is a reality. I have no control over this reality. This is how the industry works. So you have to, in your funding strategy, you have to take all this stuff in mind. And for those of you developing economic development programs in different parts of the world, and I hope all of you who are running economic development organizations in different parts of the world are developing programs to help your communities build IT and IT-enabled services entrepreneurs in good numbers, because this is a very effective way to develop economies, to develop employment, and develop economic value basically in your local communities. Today, it is totally possible to build businesses from anywhere in the world. So we're going to start with Anthony Ragone. Andy Ragone, please unmute your line, Anthony. Let's talk about
Okay. Hi, Sramana. How are you?
Spexciton Biosciences. Great to see you.
Great to see you. Okay, well, since we last spoke in May, quite a few things have gone on, mostly with customers, happily. But I'll give you an update on that and talk a little bit about the company, Spexciton Biosciences. Me on the left, Lord Kelvin on the right, who said to measure is to know. And so the first 8 slides or so are background. We've talked about them before, but nobody calls me Lord, by the way. Our mission is biotech enterprise to support sustainable agriculture yields through an early warning measurement system for plant stress, basically. And we're focused mainly on sustainable productivity in urban, organic, and small farms. And the idea is to support improved plant health that increases quality, yields, and reduces costs using rapid optical inspection services, cameras, and so on, that enable a timely preventive action or defect mitigation. So next slide. I've got a long background in DuPont, 35 years and 20-plus years in science and engineering as a leader. And we developed biotech analyzers throughout my career, mainly toward the latter part of my career. And so I've had a chance to lead people, teams of scientists, engineers, interacting with marketing and business customers. And through that time, I've been lucky enough to have a good track record and increased yields and quality significantly. Also in my background is STEM education experience and the support of Ag Biotech Ed here in the state of Delaware. And now we're in the process of kind of transforming ourselves by applying for grants as well as asking customers to help to invest in our company. Next. Growth chambers, we have a current home facility, if you will, but we've been offered space with one of my business collaborators to help them out by getting a larger lab space. But we have outdoor and indoor growth systems to allow us to grow the plants we need to test. Okay, next. The idea here is basically for us to enable the grower or the user of our services to optimize productivity using a precision technology. And in doing so, we need to use your techniques and your advice to identify the markets that can optimize these benefits most quickly. So monetizing sooner is better. The programs allowed us to help identify these markets and really delve into and meet an awful lot of potential customers. So our markets, as you know, are all these urban, organic, and agricultural segments, but it also includes universities and research institutes now. That's a relatively new development. So we want to help people grow understanding quickly using these technologies, which gives them a higher return rate on their products and investments. In the long term, basically, this is also to help reduce the high-risk nature of farming that occurs year to year and basically maximize success for sustainable agriculture. Okay? Our model is there is strong demand for improved bioassays across the biotech segment, including agriculture and industrial bio. Our technologies are new and novel and higher value in use, we believe. We've used heavily the validation techniques as recommended by you guys, a big dose of voice of the customer through meeting with and interacting with growers and researchers and establishing collaborations. We are 100% bootstrapped and hope to remain that way for some time. By the way, we have added staff, unpaid as yet, but they have become believers in the approach, and by the way, I've introduced them to the whole 1 million by million process so they can understand the whole approach. We are applying for grants, as mentioned, to the USDA, but not only ourselves, but also with our collaborators, our business collaborators. They see high value in what we do and think that we could come on board through those mechanisms. We also have strong partnerships and collaborations with University of Chicago Biosciences, companies in Denmark and Denmark Technical University, as well as a California company out near Los Angeles called Photon Systems. Next. And our market kind of looks like this. I mean, there's the big market of about $1 billion of the U.S. standard agriculture, but there's also about $43 billion in the U.S. market agriculture, which you can call sustainable and organic. So I just point to the lower left picture called vertical ag. That's a big one for us because that's got, you'll learn in a moment, really high growth rate from a both a physical plant standpoint as well as a market standpoint. The other areas, of course, are all the other agriculture and bioremediation and construction. Next slide. Now here's what's going on in terms of the changes since we last spoke. We've had a chance to really drill down into the market segmentation and learn a lot more about who's out there. So we've had interviews, meetings of about over 50 through April and July to determine the key needs and really understand who these customers are, okay? And it helped immensely because they are really different. I segmented it this way, just for simplicity, is there are shorter cycle growers, those growers who grow rapidly and then recycle into the next growth cycle. So that's mostly indoor farming, if you would, okay? Vertical growers, some types of what they call tunnel or greenhouse growers. The whole idea here is that they can learn, they need to learn rapidly to increase their productivity, and that fits well with our instrumentation and technology approach. So we can help their revenue impact and their cost impact really quickly by getting in and learning through the growth cycle, through the seed to the harvest. And so the feedstock and the plant assays and of everything that we're learning since they're much more precisely controlled, or let's just put it this way, less weather-related, we have a much tighter precision way of assessing how they're doing. So there's vertical farming like Aero Farms in New Jersey, which is a stack of 12 high racks, 80 feet long, 5 feet wide, all LED lit. And then there are a lot of organic and indoor and medicinal institute growers as well, and they rely on indoor growth tunnels. So there you've got a much more controlled environment, and it's growing extremely rapidly. So with some of these partners, we're actually now applying, there's some funding coming, we'll negotiate with them to pay us for our work, but they're also putting us on their application forms for their NSF and USDA grants. So if you would, there are multiple sources of revenue. Any questions at this point?
I have a question here. It sounds like there is a bunch of grants available for this segment that a lot of your customers or prospects are interested in, and they want to fold you into those grants. So what is going on with the grants around this?
Okay, so the grant process, the submissions occur in October, so we have to finish, right now it's the meeting the grant managers in Washington, getting them on board with what we have to offer with these companies or the companies themselves. And then, we will hear toward the end of the year is when the grant decisions
but there is a lot of, this particular sector has a lot of grants available, is that what you're saying?
Yes. USDA and National Science Foundation have a lot of grants available at this time.
No, I know they have a lot of grants available, but for this particular kind of stuff, there's a lot of grants available? Is there something special going on?
Yes. No, there's especially in the engineering measurement side, there is a lot of grant money available. I mean, we even know the managers now, and if you would, that's the hard science kinds of grants. Okay?
Okay.
And then the other side is the actual customers who have farms, the seasonal growers. That's been an interesting one because understanding their business has been really different because they're weather dependent among other things, plus they have long growth cycles. But I've met with 7 farmers, and they are all interested in our approach because they realize that much of their revenue and their costs depend on early stages of plant growth cycles. So, after the seed pops through the ground, you have about 5-6 weeks when things are really dependent on success. So helping them there, we've got several collaborations ongoing. We've actually also applied for a separate stream of grant money to help support this activity, mainly to get us to our instrumentation basis, our service basis that is more amenable to outdoor measurement, okay? Put it simply.
So, Anthony, I will tell you one thing that worries me about everything I've heard so far. I've heard the mention of the word grants continuously and not customers and revenues. And that is actually something that I don't like.
Okay. Now, fair enough.
So,
our first, the grants seem to be a natural fit, at least with the institute or the vertical growers. I think for the outdoor customers, and this is also after having met with the Delaware Secretary of Agriculture, he feels, like you, monetization is more amenable for these folks. They have a longer-term view. So, even though the grants are going to be mainly for instrument funding, we're asking for, develop the revenue stream with the seasonal growers, if you will, more than the institutional growers.
Well, and therefore, I would like to, as you develop this further, I would like you to switch to a mental model where you focus much more on, okay, these are the customers, this is the business model, this is the pricing model, and this is how much money we're going to be able to get as revenues from each of these seasonal growers. And I want to hear that language with very specific numbers. It's like, this is our business model. Where is the business model? Where is the pricing model? Grant is not a business model. Grant is not a pricing model. So we need to get to that mode of thinking very quickly. And I have the feeling you're hiding behind grants a little bit too much right now, and I don't like that.
Yeah, no, I agree. I've gone through about 25, 30 hours of the video presentations you've got online and realized that the monetization part, your real investor is your customer. Okay, I agree with you 100%.
Absolutely.
The grant dependency is really based on for the technology. From the indoor standpoint, we think from the outdoor standpoint, everything we've heard from the customer is that, come on out, measure the fields, and then we'll talk about, how do we, if we see some value there, then how do we go forward with a customer basis paid model. So the outdoor guys seem to be more amenable to that right now, simply because that's where the money comes from for them. They don't think about grant processes.
No, I think you need to get to customers' revenues and profits thinking as opposed to grant thinking shortly.
I agree. Okay, maybe I overemphasize simply because it's what's been on our plate for the last 2 weeks. So, okay, fair enough.
Okay, great. Well, good luck, and we'll talk, I'm sure, soon in the private roundtables as well.
Okay, thanks.
Okay. Ken, do you want to talk about any of this?
Yeah, I think you're spot on with your comments to Dr. Ragone. Some of his work, there's a natural predisposition to the grants because of the tech, but and he has talked to a number of potentially revenue-producing customers. So there needs to be a balance going forward. I mean, if there's a grant that's going to default to him just because of the tech that he's doing, that's one thing. But at the end of the day, we got to have revenue produced from customers that are also beneficiary of those services. So I totally agree with the balance in that pursuit.
Great. Just a second. All right. We're going next to Adam Cowperthwait. Adam, please unmute your line and talk about Avkin.
Hello, nice to talk with you all. My name is Adam Cowperthwait. I am Solutions and Marketing Consultant for Avkin. Our executive team sends their best regards, but unfortunately they are in a board meeting right now, so they are not able to attend, so I'll be presenting on their behalf. You may have heard of us before, known as SimuCare. We recently rebranded in June of 2017 and became Avkin. We are wearable technology for patient-centered healthcare simulation. You can go to the next slide. Thank you. You'll see there pictured Andy Cowperthwait, our CEO and founder. He was a former emergency room nurse for 31 years and then became a nursing lab instructor at the University of Delaware, where she was teaching nursing students how to practice better healthcare and take care of our patients better. During her time at the University of Delaware, just go back for me, please. During her time at the University of Delaware, she was working with the high-fidelity mannequins. Much of those are like what you would see in a department store, just more high technology, and those are what providers practice on before going into the clinical and hospital and professional setting. And she felt that her nursing students and her undergraduates were not relating those people or those mannequins to real people. They weren't able to suspend the disbelief, per se, of practicing on a live patient. So at that time, Amy realized that there was an opportunity here to create a product that would satisfy the needs of nursing educators and clinical educators, not only in this country, but throughout the world. So she created wearable technology. Just skip to the next slide. She created wearable technology for patient-centered simulation. So our products go on live actors, and they're able to replicate the scenario that you would be able to practice on a high-fidelity mannequin, but you're able to communicate, empathize, and work with a real person in real time throughout the simulation experience. Healthcare simulation is a $2 billion market with a potential compound annual growth rate of 19.1% by 2019. And Avkin's focus has been on creating products and wearable technology that have haptic feedback in it that allow real people to respond in real time to the simulation scenario that's being put forward. Over the past 6 months, as I said earlier, our company has rebranded to our new name. We've completed our first round of seed funding, raising almost $1 million through a venture capitalist we've grown our team from about 5 people, and I was one of those first 5 that started off in 2015, and we're now up to about 15 people total on the employee team. We'll be launching 2 new products. Our first product launch was a tracheostomy model that focused on better tracheostomy care for patients that have airway issues and respiratory issues. And our next 2 products will be urinary catheterization wearable, and as well as an IV sleeve wearable. And those are anticipated to be launched in Q3 of 2017. We are on track for $1 million in annual sales in 2017, and super excited to continue growth, and thank Dito and 1Mby1M for their support through this growth as our company.
So let me comment a little bit on this company. A huge amount of the work we did on Avkin, the name hadn't changed yet, it has just changed, but was on the sales strategy. Actually, it was, we have a sales methodology training where entrepreneurs learn how to build a funnel and move deals through the funnel, all the way from lead generation to lead qualification to pilots to demos, etc., and get to close. And a huge amount of the work that we did with this company through the program was to really drive its sales process and so forth, such that, and I'm very happy to see that you are on track to do $1 million this year in sales, and it looks like that process has yielded, and that's really great to see. So for everybody, that's something to take away, is that if you are working with 1Mby1M, or if you're an economic development organization, and if your companies are working with 1Mby1M, one of the key drivers of our methodology is to really do structured selling, scalable structured selling, and establishing these funnel management and what we call Sales 2.0 methodology to scaling companies and scaling revenues. And that's really crucial and core to the 1Mby1M methodology. So very good, great to see that you're moving along, and great.
Thank you.
All right. We are going to Adam next. Another Adam Stager. Adam,
hello,
could you unmute your line?
Simona?
Yes, go ahead.
Thank you for the opportunity to present with Dito. It's been a great experience so far. So like the slide says, I'm Adam Stager from Newark, Delaware, which wouldn't be a surprise if you knew I was getting my PhD there in mechanical engineering with focus in robotics. So I'm there at University of Delaware. And I love robots, I love virtual reality, and I really like keeping up with tech. So the business concept that we're exploring, and it's more of a new company than the previous 2. Or it's not a company, it's really just a business concept so far. We're calling it Virtual Home, and we came up with this idea because we believe there's value in having this new technology called virtual reality in the new home construction market. And what we plan on doing is creating these immersive, interactive home environments so that we can represent all of the available options for customers buying new homes. And that means they can virtually walk through the home and see what they're going to get before they actually have it built. So it gives them a lot less uncertainty. And it's not just me on the team. We also have our, I guess, kind of co-founder, if it was a company, and that's Keith Modulewski. He's the founder of 2 companies, and he's been a great help in terms of the entrepreneurial aspects. So when we started out, we just really wanted to validate that there was even a problem here. And what we were considering was this idea of uncertainty in new construction and home buying. And we quickly realized that it's actually this multi-sided thing. It's not just one customer that we would have to please. There's the home buyer who wants less uncertainty because what they're looking for is their dream home, and they don't want to end up with something that is not that. And that customization has been really important to the people that we've talked to so far from that side. And the home builder, we thought originally that they just wanted to make money as quickly, money as fast as possible, but it turns out it's very beneficial for them to provide as much as they can of what the home buyer is looking for, and that's what helps them sell the homes fast. Unfortunately, there's this loop, though, that actually happens now, and that's the home buyer searching for what exactly their dream home is, and the home builder doesn't really have the ability to give them exactly that and show that to them, because they can only have a model home and a demo studio, for example. Next slide, please. So we kind of dug a little bit deeper, and I'm sorry how I don't know how that slides got a little bit messed up there, but what we saw was the tools that these guys are using each side. So we saw that there was actually a pretty big social aspect to the home buyer, and they do talk to their friends and family who have purchased new homes in the past, so they can figure out the experience they had with the builder and the quality of their work. They also go online and search for model homes that seem to fit in the format of their dream home or whatever they have in mind. And they use the tools that the home builder gives them, including the design studio, a bunch of different floor plans, and these virtual showrooms and walkthroughs. But because there's a social aspect in finding a new home, next slide, please. We believe that we can have growth of this business concept driven by the customer demand. So this organic growth would be really helpful here. And we believe that because if we are able to provide that less uncertainty to home buyers, we can make them happier with their experience, and they would talk, therefore they would have the social aspect would kick in, and they would talk about how their experience was, and how they were able to see potentially this immersive, interactive home environment, which helped them visualize their home before they got it. And because home builders are so, they focus so much on making the home, or basically giving the home buyers what they're looking for, we believe that they would adopt the technology a lot faster once we had some traction with them. Okay, so the next slide. The next slide is it worth it? Because you don't really want to be working on something that's not going to have, not going to pay off in the end, I guess. And we kind of started with this bottom-up TAM approach, like you suggest, and that's kind of seeing what the numbers are. We're not really sure, if we have some value here, we're not necessarily sure what the number is in terms of what they're willing to pay yet. But so far we know just a basic search online will give us the 30,000 new USA communities, and maybe we can assume that there's one floor plan per new community that we could sell to. But we did dig in a little bit and look up by hand in Delaware, because that's kind of where we're starting here with Dito. We found 145 new communities there, and that is basically the result of 30 different builders, which, in the beginning we might only target one subscription, for example, each. And that the pricing there, so I guess the next part is the pricing, and what we would see is, it's pretty tough talking to the builders. They're pretty slow to adopt new technology. So we would like to make it really flexible for them, as opposed to having like maybe one community would be a fixed price. We'd like to do it per floor plan with options on the number of available options there. The quality could be something that's flexible, and then we could just rent whatever equipment they need to get the VR experience. And we would want to do that with a SaaS model so that there would be minimal risk for them. So if they see value, if they begin to see value, then they would hopefully, or what we hope is that they would, move into more home floor plans after that.
So Adam, how many of these people have you talked to? You've identified 30 builders right there in Delaware. How many of these builders have you actually spent time with on this concept?
So I've talked to only six. So yeah, that's why I say it's very new. So I've only talked to 6 of the builders themselves, and I have only really talked to the people on the ground level. So I haven't went to the decision maker. I really went to the person who's sitting there in the studio, and I've said, just ask them what the problems they see when they deal with customers. And one of the big ones is when a customer asks for, say, for example, there's a tile floor and they want to see hardwood. Every time they go behind the desk and they pull out a little tile of whatever that material is, and they say, so I try to make them visualize that with this little tile of material. And if they need more, they have to drive the 45 minutes or half an hour to the design studio we have. And that's kind of a challenge because you work back and forth quite a bit. So there's a time aspect in terms of closing the sale.
So based on what you're describing, I would like to point you to go do the Sales 2.0 module and learn this concept that we have introduced there, the difference between the economic buyer, the technical decision maker, and other people who are influencing the sale inside the company. So it sounds like your economic buyer is the owner of the builder company, and then you have people on the ground who are evaluating your technology and helping you figure out how valuable it's going to be from a technical point of view. And you're going to need to sell to both of them and navigate that process. So you need input from both sets of people, the economic buyers as well as the technical decision makers. And just now in the validation phase, you're not even in the sales phase yet, you're in the validation phase, you kind of need to get validation from both of those constituencies. So, my strong recommendation would be to break up these 30 builders that you've identified into, and in each case, identify both the economic buyer and the technical decision maker and have conversations with each of them to really deeply understand, immerse yourselves in their situations, their problems, their pain points, and really understand what they're looking for and what are they willing to pay for. If you were to deliver a solution to what they're looking for, what are they then willing to pay?
Absolutely, absolutely, 100%. That is great advice. Thank you for pointing me in that direction.
Great. Okay, terrific. So we'll get as much of that as possible, and then let's discuss your pricing model options once you have some of that feedback. And there's a module on pricing strategy, which is quite comprehensive, and I would also advise you to go through that as you are having these conversations so that when you come back with some of that data, we can work through, your options based on what you gathered there, but do it with the help of the curriculum so that you're gathering all the right data and asking the right questions.
Wonderful.
Okay, good luck.
Yeah, thank you.
Okay, folks, we're going to go a bit more into the brainstorming section. Ken, could you also tell us about any of the other companies that have been part of the program that you want to mention in this process? I know you have some others that you wanted to highlight as well, who are not here today.
Yeah, KA Analytics was a data collection company. You might remember Sharama, who we, through the course of a couple of sessions, discerned that they really needed a much more sophisticated software protocol than what they were advertising. And that, I think we all agreed that was a next step for them. Software development is a challenge in most ecosystems to get the right level of expertise available to early stage entrepreneurs.
If you have a non-technical founder, there is then you have two options. One, you're going to have to either get a technical co-founder, or you're going to have to since it's very difficult to hire people, you don't really have a lot of resources to hire a lot of people, a lot of highly capable people. Your options are you're going to probably need to outsource the development to a lower cost region, whether it's Eastern Europe or India or Asia or whatever, or you're going to have to get a co-founder.
That was a recommendation, and that is exactly what he did. He looked for three months or so, and think he found a match overseas. I think the person's actually in India, and he put him under contract, and they've been working on that software over the last 3 to 5 months. He's actually over there now. That's why he couldn't participate today. So I'm excited to hear feedback from him when he returns, and we'll make sure we set him up for another session so he can share that feedback with the both of us. Okay, great. I also wanted to mention, you might remember V2 Mob, Matt Myers, who had the concept of providing essentially credit card services to those developing countries that don't provide those services to their citizens. And when Matt Myers got into you also may remember, Sarama, he got into the program, 6 months into the program, he decided to run for political office, and he was elected as the executive for the largest county in our state. So he couldn't be here today because he can't promote his private company during work hours. But he's doing very well. He went from $15,000 in sales when he first came into the program. They are grossing in excess of $2.5 million in sales right now. The key for V2Mob was those several discussions we had about targeting those three segments of the marketplace where we were seeing opportunities because we were seeing revenue. And he had some other options on where to target, and through your consultation, we identified three, and that's where we're getting some success from his company. So hopefully we get Matt on here one day again and share his own story, but he's doing extremely well right now. Okay.
Great. So let's open the forum up for questions and comments. And, if you are representing an economic development organization yourself, please do share with us what is it that you are doing in your area and what kind of issues you're facing, etc. So let's just make this an interactive rest of the session. By the way, in terms of options, you can either use the public chat. Make sure you set your chat to send to all participants, and if you type in your questions, comments there, I will be able to pick it up from there, or just call in. Tell us in public chat that you're planning to call in to the teleconference. Put your computer on mute so that it doesn't echo, and call in at 650-479-3208. Access code 661-664-880. And I will ask for you to talk about what is it that you're interested in discussing. So let us know. Tarun Sainani has a question for Ken. Thanks for sharing your views. This is Tarun from World Around Me, a Google Award-winning app helping tourists find nearby services. We partner with cities to enable promotion of events through our app. Hope you get to try it on your smartphone. So, Ken, you're getting a sales pitch from somebody, from an entrepreneur in the audience. And Maureen is asking you to send your your messages to all participants. I just got a private message as well from Rishi Gupta. My question, whenever you begin to take them, what are some other platforms comparable to Amazon Fashion in terms of scope, size, breadth, and reach? Are you looking for a marketplace where lots of small fashion retailers can sell their wear, or designers can sell their wear, or are you looking for, because Amazon has just launched a very big private label business in the fashion area. So you need to, Rishi Gupta, please elaborate on what is the question, and make sure you send to all participants and not to me privately. Tarun Sainani is calling in from Lancaster. I would also love to hear from Ryan Stevens, who's in the room, Economic Development Director for the city of Cannon City, Colorado Springs in Colorado. Ryan, if you have thoughts or perspective on what you are doing or what brought you here, we would love to hear from you. And anybody else. By the way, this is also a great networking time, so please introduce yourselves with what is it that you're doing, what brings you here, where you're based, etc. We just got to know a little bit Tarun Sainani from Lancaster. We'd love to hear from all of you who are in the room. What are you doing? Where are you calling from, etc. So while you're lining up your questions, let me also explain to you what we do at 1M and how you can use the program for your benefit. And before I do that, I want to request you to bring serious entrepreneurs into 1M. And the word serious is in bold, you see. This is not a place where people, you know, come with ideas of becoming successful overnight and that you just kind of do a few things here and there and then you start generating huge amounts of revenue or raise huge amounts of financing. You need to come here with the understanding that entrepreneurship is a marathon, not a sprint, and you're going to have to put in an enormous amount of work to validate and so on and so forth, get to revenue, eventually get to profits to secure your sustainability. And that's the kind of entrepreneurs that do well in this program, not the unrealistic kind. And also those who are really hardworking and are willing to study and follow the methodology that we have developed and that is working really well in the program for many, many, many years now. We've produced many success stories, and that would be, you know, that's the methodology that you need to be following, and it's a lot of work. It's very rigorous. So all resources are at 1mby1m.com. You will find a great blog free of charge, which you can follow, and you will get inspired, informed, educated through the blog itself. So just if you follow the blog, that is something that is going to keep you moving in a positive direction in terms of your learning. Then you have the Entrepreneur Journeys book series, which are case study-based books, 12 to 16 case studies per book, double-clicking down on a particular topic, whether it's positioning or bootstrapping with a paycheck. You know, we've learned that bootstrapping with a paycheck is a tried and true methodology, and we've put together learning material in form of a book as well as curriculum modules and case studies on that topic, etc. So you can get all these books on Amazon. These roundtables happen every Thursday morning. So we have tons of roundtables coming up. If you want to click, if you want to pitch, click on the free public roundtables navigation tab on our website and register to pitch or to attend, and Maureen will be in touch with you with instructions. Our full-blown acceleration program, which is what Ken is talking about and is using for Delaware with us, is the 1M Premium program. And that offers you extensive methodology guidance, a full online curriculum that you can do at your own time. And this is important because a lot of people are doing it on the side, and even people who are out there meeting with customers during the day can spend time in the evening doing the curriculum, etc. Business development, we introduce you to people where we have contacts that you want to reach, and we do a lot of strategy consulting as well. This format, where in the private roundtables, go a lot deeper, and we do a tremendous amount of strategic planning in these sessions on each of our companies. And the combination of the curriculums where you learn the methodology and the project-based consulting that you have in the private roundtables is the way the 1M program is delivered. We also help you with financing, but you have to get there. You know, you have to get enough validation before you can attract financing, and that's just the way the industry works. And once you get there, we will introduce you to entrepreneurs, to investors who would be interested in your venture, but you have to get there. We will help you get there, but you will have to follow that process, and you'll have to, you know, basically get to the point where you become what we call fundable. And a lot of companies who come to us are not found fundable out of the gate, and that is just the reality of where entrepreneurs are. We have tremendous clout in the media, so we can get you a lot of publicity. You know, so that's something that is worth looking at, because you have to get the word out there about what you're doing and get your customers to look at what you're doing, get social proof, get media validation, and that's something we are able to give you because of our clout in the media. The 1M1M self-assessment is a questionnaire. It's a questionnaire that kind of simulates what investors would be asking you, but we recommend that you ask yourselves these questions. And these are questions that you should ask yourself from the point of view that you are the first and most important investor in your venture. So this is a great tool. I see that Ryan Stevens from Colorado Economic Development Organization is saying, I'm looking for tools for our local entrepreneurs in Canyon City, Colorado, currently working on putting together a business plan competition. Well, Ryan, look at this 1M1M self-assessment. Every single one of your entrepreneurs should be taking this self-assessment and trying to answer these questions. It's very, very precise questions in terms of strategic planning, and these are the kinds of questions investors evaluate you on. Now, there's a lot of methodology that you need to know to be able to answer these questions. If you get stuck in answering those, methodology blocks, go to 1M1M Basic, which is our curriculum-only option at $99 a month, and you can just learn whatever methodology gaps you have. There are questions that you cannot answer. Well, go do the methodology module for that particular topic, and you will be able to learn how to answer those questions. And remember one thing, entrepreneurship, especially first-time entrepreneurship, is a tremendous learning curve, and you are going to need to somehow or the other cover that learning curve in an accelerated format. And that's what we are trying to do here, is to give you the tools and the techniques to be able to, bridge that learning gap that you have, so that you can become a sophisticated entrepreneur rapidly, so that you can negotiate better, you can, survive, you can manage your runway better, you can manage your resources better, and most importantly, get to customers, revenues, and profits as quickly as possible. That's the whole point of entrepreneurship, is to generate customers, revenues, and profits so that you can have a sustainable business that you can, call it success. So go dig around on the website. You'll find tons of information, lots of videos, video FAQs that will help you understand what this program is all about. There is a deep description of the curriculum itself. Remember, our program is a case study-based program. We have over 750 successful entrepreneurs who have been working with us to deliver their case studies, their entrepreneurial journeys, and you get to stand on their shoulders and learn from them. So there's strategy, there's tactics, there's nuances of particular markets, particular types of businesses, business models, etc., that you will learn because of that work that we've been doing for years and years and years. Every year we add about, close to 100 new entrepreneur journeys into the curriculum, and as a result, it's a very rich curriculum where you kind of get the feeling, as you read these case studies, you get the feeling of actually sitting down and having coffee with some of these very successful entrepreneurs. There are over 50 case studies of entrepreneurs who've built over billion-dollar companies. These are the unicorn entrepreneurs. We have over 400 venture-funded entrepreneurs. We have 300-plus bootstrap success stories. So it's a very, very comprehensive body of case studies and entrepreneurs that we are connected to. These are also people who are part of our community and our ecosystem. So yes, there's a tremendous amount of resources available here for you to leverage. The methodology is lean, capital efficient, bootstrap startups. Even if you raise money, you're going to have to bootstrap first, validate, and then and only then would you be able to raise money. That's pretty much it. We have 3 more roundtables in August, 10th, 24th, and 31st. And we look forward to hearing from some of you there. And back to Q&A. If you would like to call in, you're very welcome to do that. And also use the public chat to put in your questions and comments. Ryan, I want to comment on your point that you're currently working on putting together a business plan competition. If you like, you know, a lot of our partners offer 1M1M scholarships as the prize for their business plan competitions. It's a $1,000 value. If you're interested, please feel free to let us know, and we'll be happy to work with you on your business plan competition if you want to partner with us. And people do, you know, entrepreneur pitches. We do custom roundtables to have the pitches of your competition at our roundtables and so forth. So we have very creative ways in which we've done business plan competitions and contests and so forth. So we'll be delighted to work with you if you'd like to. And let me also introduce you to Irina Patterson. Irina will follow up on this. Irina, her email is irina@1Mby1M.com, and her phone number is 786-301-2456. So Ryan, Irina would be delighted to work with you and flesh this out. And anybody who has questions about 1M1M, please feel free to contact Irina, and she'd be delighted to answer your questions. Virginie Guinard is from Switzerland. Virginie, what are you working on? And anybody else? Other questions, comments, introductions? No? Nobody else has introductions? Nobody else has questions, comments? So, you know, the person that we have on the screen right now, Dan Stewart, CEO of Happy Grasshopper. Dan actually came to the program with the idea of raising money, but eventually decided to bootstrap based on what he learned here, and completed $4 million in revenue in 2016, completely bootstrapped, and now he doesn't want to raise money. He can raise money. He qualifies to raise money, but he doesn't want to raise money. So it's an interesting mental model transition that people go through once they can figure out how to generate revenues. Sometimes they just want to keep generating revenues and fund the business organically, as opposed to going out and getting investors. And investors come with their own sets of, you know, baggage, basically, where you're going to have to report to them constantly. You're going to have to keep them informed and so forth. So you lose a lot of freedom when you bring investors in. You do gain a lot of resources, so you can potentially grow faster if there's something that, if you've figured out that this particular customer acquisition strategy works, and if I put in, you know, $1 million, I would be able to, on the other end of the funnel, I'll be able to push out $4 million in revenue. That is a scenario where investors can be very helpful. Okay, well, we are going to adjourn the session. Thank you, Ken Anderson, for being part of the program today, and thank you to the present presenters from Delaware. I seem to have one other question here. Tarun Sainani, is there a difference between building a company to create long-term value versus create a company that will sell out to a bigger firm? This is a question which I keep asking myself, and the answer decides the next step I take. So, Tarun, it really depends on what you would like to, what you would like to do. So the exit is not a requirement if you do not have investors. If you bring in investors, then you'd have to typically give them returns. And the typical method of giving investors returns these days is through an exit to a larger company. So if you want to bring in investors, you have to more or less factor in that you're going to have to sell the company. There are very, very few investors who would work with you on a dividend model where they don't want to sell, but they want you to pay dividends out. But that's few and far between. But the general ecosystem tendency is for investors to need exits to to larger firms or as an IPO. Now, it really depends on you and what you want to do, what your desire is. If you build a company that is generating good, solid revenues and profits, you may not have to sell the company. So you have three investors, you have investors from 3 years ago, but you've been bootstrapped since. And what do your investors want? Are they pressuring you to sell the company, or are they asking for some sort of an exit? What is the dynamic with your investors right now? No pressure from them. Well, in that case, you have no pressure to sell. And if at some point these investors do pressurize you to sell, you could also potentially buy them out. Once your company starts generating enough profits, you could also buy them out. You can negotiate a deal and then buy them out. And if you want to continue running your business and building your business, just do that. And as you said, ignore them. Anybody else? I am about to adjourn the session unless you have questions. If you have questions, we will definitely take your questions, but I don't see other questions. So, well, let's come back and reconvene next week and bring your questions. If you'd like to pitch your business, come and pitch your business and let's work on your business and let's keep going, okay? So good luck with everybody. And Ken, good luck with the program in Delaware. We are very, very happy to partner with you and we'll continue to do so, I hope, in the future. And for anybody else who's trying to build an economic development program in any corner of the world, please come talk to us. And we have many, many, many different ways that we can help you. And we have a lot of experience doing this right now. So please reach out and we look forward to working with you. Thank you very much. Yes, go ahead, Ken.
Before you close, just want to thank you for the opportunity to participate in this program. I'm really proud of the job that our guys did today. And right now we have a new administration in Delaware, and I am presenting to have this program rehydrated so we can continue with the great support that we've gotten from 1M1M. So thanks a bunch for the opportunity.
Fantastic. We look forward to it, Ken. Bye-bye. Take care, everybody. Good luck with making lots of progress through the week, and we meet here again next week. Bye-bye.